Okay, welcome everybody to today's webinar on 5 key documents to help you with the superannuation reforms. There is certainly a lot of information that we're going through and a lot of work that needs to be done, and as we lead up to Christmas, we still have our foot firmly to the floor going through and making sure that we implement these things with our clients in a timely fashion. So I'm going to take a slightly different tact today in respect to the way in which I'm putting this webinar together. And I could have just gone through and spoken to you about the real technical elements to why we have these documents inside our membership platform and how they can ultimately help. But what I've done today, and I first wanted to thank Sam for enabling me to do so, but we have included today a success story within our client base. And this is a success story very much around a member of Collins House, so Sam Campese, who's the director and principal at Collins House. What we've been able to achieve with them over the past 12 to 15 months in particular, as we've moved through the reforms. Not only have we been able to get that business up to speed in terms of the technical competency, but then also through the implementation through our membership to deliver them a better result in their practice, delivering greater certainty. And you'll see all these, elements of the success at the end, but greater certainty, de-risking their practice, improved serviceability to their clients, and ultimately increased revenue. So here's a little bit of background to the business in the first instance. So they're a Melbourne-based financial planning and accounting business and have around 150 self-managed super funds. They're adding somewhere around 25 new funds each year. And they were using, prior to me getting involved with the business, a desktop software to administer their SMSFs, which they didn't really have any overarching concerns with, but we're in that process of evaluating the various cloud-based software options. And initially there was that thought around, well, it's a cost versus benefit. There's going to be an increase in that. How do we really need to reconfigure everything that we're doing as a result of making this shift? And when I looked at the business, I could see that it was what I would define as a generalist approach to doing work, where we're looking at this work on an annual basis when it turns up with time-based billing. There was a real inconsistency in the way in which the deeds had come about and were constructed, the way in which the pension and compliance documents were being used, whether they were being used out of a system, whether they were being used some other way. We really needed to go in and look at how we could improve the way in which the SMSF business model in this practice would work. And the tipping point then really came off the back of these superannuation reforms. So the challenges, when I asked Sam as part of this webinar, well, what were the biggest things that made him really come to us and think about why it was important to become a member and how we could ultimately help? And when it came to the reforms, he needed to make sure that the team understood the impact of the superannuation reforms, how they would impact their clients, and where the opportunities would actually present off the back of these as well. And furthermore, we then needed to ensure that we were identifying all the processes that were going to be required to change due to the introduction of these reforms. So we were going to have to look at things like the trust deed updates, how we're going to deal with the transfer balance accounts, and how we would need to comply with the introduction of the transfer balance cap. We then need to contemplate things like CGT relief and look at how the pensions are currently being operated and ensuring that all the documentation around that implementation, including the compliance documents on an ongoing basis, are all consistent in the approach in what we do. And most importantly off this, we need to make sure that we can continue to do this as efficiently and as effectively as possible, because we're seeing an increase in the regulation, but at the same time, there is that competing demand around those types of services that are being offered in the marketplace. So we're not necessarily just going to be able to leverage a substantial increase in price to our clients, we've got to be a lot smarter in the way in which we're providing these solutions to our clients. So when we get to, I guess, what was needed, then what I asked was, well, really, how are you feeling though? And this is the most important piece that I actually mentioned to you as well. Because for many people, and this was certainly the case with Collins House, is there's a sense of that we're a bit lost. We're actually not sure that what we're doing is being done correct, because we don't necessarily have the level of specialisation that someone like the SMSF Academy has to ensure that this is being done correctly. And for a business like this, we're saying we need some level of support. So where can I turn to give me the guidance that I need to actually help me deliver the outcomes that my clients expect from a business like Collins House? So that unsure of yourself was certainly something that resonated with Sam, and we were a key focus in helping ensure, and we actually measured this to ensure that initially out of 10, where were you in your business around that uncertainty that you actually have? So how confident are you right now to ensure that you are implementing the reforms correctly with your clients? And then we've measured that over each quarter, and we've seen a substantial improvement in the way in which not only Sam is, but the entire team feels in the discussions and opportunities that arise with their SMSF clients. And then what we also asked was around whether the implementation here was being processed correctly. So this then comes down to the team and the systems and the way in which they do the work. And what they found is they were regularly questioning themselves, am I doing things right? And that's that seed of doubt that starts to really question, what level of investment do I need in my business to ensure that we can actually do this in the most appropriate way? And this is where we stepped in and we said, and I guess Sam said, there has to be a better way, or it has to be a smarter way of doing this. And that's why I wanted to show you today 5 key documents that we've actually used with Collins House to actually work through the superannuation reforms. And again, we're not going to go through the absolute specific details on each and every document, but just to give you some oversight and the way in which you can be using these from an integration point of view, and what you need to be looking out for along the way. So if you do have questions throughout the session that you may have on a specific document, please feel free to ask them, and we'll be more than happy to answer them either as we go along, if time permits, or towards the end of today's session. So when we went in, the first thing that we needed to ensure that we looked at is around the deed, because the deed here really sets the foundation in respect to what we can do with those SMSF clients. So we had to go through this process, this upgrade process, because we had a difference of deeds in the system. And that means when we think about the advice that needs to be provided, we need to ensure that it is current and allows for some of the most common strategies that may be employed now under the superannuation reforms. Some deeds have dated a fair way back. Some deeds have been done in more recent times, so you needed to make decisions as to whether an upgrade was appropriate or not. What Collins House decided to do was to go through and do a uniform upgrade around all of their clients, and it was a function of efficiency that they wanted to achieve out of that process. We then went through and said, well, look, let's look at what are the clients that have or are significantly impacted by the transfer balance cap requirements, or whether they had even TRIS reforms. And we're going to focus today on the transfer balance cap item, in particular because many of us have focused on the requirement that needed to happen at the 30th of June or before the 1st of July, but there is a 2-step process that we need to ensure that we're implementing, because the Commissioner did clearly set that out within the PCG 2017-5. From that, and we still are working through the ability to apply the CGT relief. And many of you that may have been on our masterclass recently, we spent a lot of time looking at the eligibility and the requirements and how you need to be documenting these decisions. And we'll talk a little bit about that today, but understanding how the relief works, to who it works, and why we may put that relief in play has been a real important ingredient in the way in which Collins House can actually approach their clients and provide some real valuable advice around that CGT reset. Then, as we start to look into the future, we then look at the way in which we want to construct our new income streams and revisit the existing income streams. And that may be also around TRISs and the concepts that we need to deal with around TRISs in retirement phase or not in retirement phase, whether we're going to be commuting TRISs back to account-based pensions because we cannot auto-convert those, as is the ATO's current view. But we built processes now around and a consistency and approach around the way in which income streams are going to be constructed and moved that process away from simply relying on the pension documents that spit out of the SMSF software. And we'll explain a little bit about that more later. And then what it's allowed us to do is, because we've built a new process in how we're going to deal with the ongoing administration function of our SMSFs, because we've taken on board that cloud technology and you have to go through a period of implementation. It's allowing that business to be more proactive in how they not only deal with the administration function and the alerts and system to tell clients about what their pension obligations are and how they've been taking it, but the advice that actually comes around that as well. And we've spoken in the past in some of our training, the new way of dealing with benefits and what this actually means, both in a client context, but then in a business context as well. So like I said, the first thing here is really aligning your client's governing rules. And this was, as I mentioned, the very foundation point that we needed to put in place. And this laying of the foundation becomes critical for what the fund can and can't do. And what I've done here is I've split this into where the real benefits lie in respect to the client, and then what it does for the business. Because for the client, they're relying upon you to ensure compliance with the new superannuation reforms. And I'll touch on in a minute, some of the changes that you should be seeing inside an SMSF trust deed from a mandatory point of view because of the reforms, but then some of the other things that a strategic deed would ultimately be considering off the back of these changes. What the clients also wanted is that they wanted to ensure that the advice then that was being provided from Collins House will maximise the retirement savings under the new rules. Now, sure, we've had clients be impacted by having a $2 or $3 million pension now back down to 1.6, but they are seeing the benefits still of having that money inside superannuation. So they're expecting the advice that is coming from Collins House to ensure that the outcomes that they're wanting to achieve around their goals are still valid. And ultimately, this leads to a confidence that Collins House as a business, they're on top of the changes and the impact on their clients. And they're seen as proactive in the eyes of their clients by making these suggestions, recommendations around why we needed to do the reforms and why the deed is a core part of that ongoing process of change. Now, let's look at this in a business context, because for Collins House, and in particular the advisors and the accountants in the business, a consistency in the trust deed here means that within that practice, there's explicit knowledge of the governing rules that will apply across all of their clients. So we're not needing to, each and every time a client is on the phone, you're going to have to say, well, look, the rules say we can do this, but until we actually go and check the fund's trust deed, we're actually not sure whether we can or can't. We may need an update, we might not need an update. The fact that we look at a whole of practice replacement here to those governing rules, of course, there may be some exceptions out there. I do understand that. But then it ensures that the advisors in particular and those that are front-facing with their clients know what can and can't be done by virtue of the deed. So that is an important piece, because it not only empowers the advisor to be talking about the strategies, but it minimises the risk of the advisors as well, because they're not wondering whether the governing rules or not allow for it. So it's a great tool from a business de-risk point of view as well. We then looked at this, how do we actually go through the upgrade process? So until we got a level of efficiency until we got to a point where the funds were inside the system, the SMSF cloud software, and we had the information inside that system, it was at that point that we then actually undertook those deed upgrades, because it gave us an efficient process to upgrade with the SMSF software integrations that we have with both Class Super and Simple Fund 360. And what this did is it enabled them to go through a standard pricing process and deliver this in a very efficient period of time, which not only saved them time, but also increased the revenue of the business around that trust deed process. And of course, they then had the ability to leverage the technical expertise that we have in here on some of those specific client issues, and whether we've found requirements where there was a founder in the deed, or there was something else that just needed some additional level of support, or just a question that they had through that particular process, that they could rely on that technical specialisation that we have here to be able to facilitate that deed upgrade in the appropriate time frame. So the requirements that I think what you need to be looking for around these deed upgrades is this concept of retirement phase is ultimately something that is critically important now. There's definitional changes we've seen around transfer balance caps, around the transfer balance accounts, dealing with excess transfer balance amounts. We've seen also now changes to the TRIS requirements. So what we need to do about a TRIS that moves into the retirement phase and the written notice that is required there. So these sorts of things you need to be looking out for, and not simply assuming that there is a auto conversion event that may occur when a TRIS moves from a TRIS either into the retirement phase, or you just think that it magically becomes an account-based pension, which the ATO has clearly stated it cannot. The requirements around eligibility for authorised contributions as we define it in the deed. So, a member that has a balance over $1.6 million is no longer eligible to do so. So introducing those types of definitional requirements. Death benefit pensions, so whether amounts may have been transferring out or transferring into the fund, that they retain those characteristics of being a death benefit, because we have no ability in respect to those amounts to be retained as member benefits. They are, once a death benefit, always deemed to be a death benefit. And finally, those elements of dealing with the ATO's reporting requirements, whilst not explicitly talking about T-bar reporting, in essence, there are additional obligations imposed on the trustee to ensure that we comply with the reporting requirements, whatever the ATO would require the fund to do. And we know that the requirements will differ for T-bar with an SMSF, subject to the value of a member's total superannuation balance exceeding $1 million or not, and what that impact has right across the fund from the 1st of July 2018. The other thing, though, is that what we did is we went back and revisited why we want to, or what we need to look at inside the fund as a result of the reform. So we went and revisited things like the ability to add special rules to the fund. So the fact that we can commence an income stream and add that to a special rule of the fund, the terms and conditions of that income stream. If we have pre-existing pensions, we can add that account-based pension that may be in place as a special rule, because what that is enabling us to do is to potentially in the future alter the terms and conditions of that income stream without a commutation and repurchase, because we could end up in a situation whereby we have one accumulation interest which may have undone some of the planning that Collins House used, in particular things like recontribution strategies, setting up multiple pensions and so forth. So the ability to add or remove a reversionary under the pension being a special rule was something that was seen as important, and they were going through that process of ensuring that the existing pensions that are in place are now being lined up to what the governing rules of the fund say. And then finally, this concept of a paramount document. And again, through this resetting of the advice process across their clients, they can be having conversations around, well, what do we want to have happen in the event of the death of a member? Whether we want the auto-reversionary income stream to take precedent here, or do we want a decision through a death benefit nomination to override such a decision? What we introduced through this process is the concept of a paramount document. So if the decision is that the death benefit nomination is to take precedent, and there's an auto-reversionary pension in place then that auto-reversionary pension would no longer continue upon the death of the member, because the deed has been constructed in a way that has been nominated for the death benefit nomination to be the overarching and operating document there. So it deals with that level of confusion or inconsistency around those types of estate planning decisions. So what we've done here is I'm just going to quickly show you how relatively easy it is to go through and order through our integrations and add-ons. And I'm just doing this on video for the sake of time here. But once you go to your integrations and add-ons tab here, you can then simply go through and once you've connected your fund, or your software, I should say, you can then go and choose your fund, and it will pull down all the information that it has about the superannuation fund. There are some decisions that you need to make in here yourself around the different rule, or whether it's a QROPS, for example, putting in the members. All this stuff will populate through, and then you can see here you simply have the ability to submit that information after you've reviewed and you are happy with it, and that has been done in the best part of a minute. Now, in this example, we've made sure that all the information around the history of the fund has been included inside the software. So that's how simple and quick it can be to ultimately prepare the trust deed documentation. And if we look, you might just change the share here to make sure we can see this. But you can see here we now have our completed deed. We've got our deed of variation. We've got our governing rules here, our new governing rules around that fund. And then we have obviously all the different rules around the changes and so forth into the deed. In particular, some of those core changes we spoke about around accessing member superannuation benefits and the changes into the definitions, etc., etc. So that's what can happen in respect to the deed and how quickly and efficiently it can be done. That will always then be available within your completed orders area. So it is stored using our Amazon S3. You can see here there's that completed order. You can pull down the document and access that at any time. We do have the ability at the moment to integrate with Dropbox, Google Drive. We are now ready to working and started work on the integration to be able to send this stuff back into Simple Fund 360. So you'll be able to push that information back into your BGL software. We are looking at a couple of other integrations in the marketplace as well. So if you do actually have suggestions around document storage that you use, one of the others we've see regularly used is box.com. We'll look at a range of others. How Now is a business fitness. We're in discussions with them about their document storage area. So if there are questions that you might have around those, ask us, and we'd be more than happy to look at that further. So let's now move back here and keep moving on through this process. And we do have an offer at the moment around our deed upgrade service as well. So if you've got more than 50, we do have a membership option which would amortise the cost over that as well. So Graham asks here, should the ATO make available a standard deed on their website and keep it updated? Most deed providers can see the advantage of a generic deed at their practice. There are elements to a uniform deed, and this was looked at in the Cooper review some time ago, but the reality is there are too many variables that ultimately come up that would mean we need some level of customization introduced. You could argue that there's a standard that would be introduced, but in reality, the panel, the Cooper Review panel, ultimately saw that would not be appropriate off the back of those key recommendations. Garvin then asks, I understand the importance of the deed. However, what is the risk if the deed is not adhered to? Under most deeds, the risk is of being sued by parties to the deed. The only risk I can explain to trustees is that should their marriage break down or die, questions may arise as to the adherence of the deed. So one of the biggest issues that I see is around death benefit nominations is quite clearly if you don't follow the deed, then that deed, that death benefit nomination will be invalid. So in particular, in warring parties, we've seen cases over the past 7 or 8 years now make that very clear. Also, we've got guidance from the ATO within Tax Ruling 2013-5 that actually talks about when a pension can commence and cease. And right throughout that document, it talks about the fact that the pension must adhere to not only the requirements of the SIS regulations, but the governing rules of the fund. And this is important where we have a situation whereby if the fund does not meet the requirements of not only the SIS regs, but the way in which the pension rules are being constructed, then the pension will cease. And of course, we would fail to get our tax exemption done as well. So there are a range of factors that really enhance or help understand not only why the deed needs to upgrade, but more importantly, some of the strategic benefits that need to be focused on as well. And we've got a standard letter. If that's something I'm happy to share, provide some information on that as well. I would suggest to people that you'd be more than happy to use that if you want to, provide an explanation to clients in terms of how that would be used. And I might just take one more question here and then we'll move on. So Jacqueline, is the deed update not going to be too late for someone of the changes that have already happened, i.e. commutations with the CGT relief? So in respect to, as long as the fund has the ability to allow for commutations, I don't believe that's a problem, because the introduction of many of those definitions, transfer balance caps and so forth, started from the 1st of July. So as long as you've got the powers to deal with the commutations, I believe you're fine, and it's subject to how you complied with that would ultimately dictate whether that was fine or not. With CGT relief, it actually has no bearing on the deed whatsoever, and this is one of the things that I've seen within the software documents, that it references to the deed, and I've had a couple of people come back to me and say, well, the auditor's not happy with these documents because it's making reference to the deed, and the deed has no ability to deal with the CGT relief as well. So no, it's not too late to look at the deed update requirements, but it may, but arguably it's not going to be conditional upon some of the actions that were taken, because you needed to put those in place in order for the new rules to kick off from the 1st of July anyway. So I will take the other questions shortly as we get through, but I am just conscious of time to make sure we get through as well. So we've gone through that. So then what we went through is we said, well, okay, we need to make sure we comply with the introduction of the superannuation reforms. And there was an identification process within the business. They were able to use a lot of the analytics and insight within that cloud software to now go, these are the clients that have TRISs. These are the clients that have transfer balance cap amounts. And they were able to far more easily identify that process. But we had the ATO set out now the steps that we needed to do as we led up to 30 June to comply with the transfer balance cap via PCG 2017-5. And I've spoken about this a lot of times over the past 6 months or so about what needed to be done because of the significance of the impact of not getting it right. And one of the most critical things is if you didn't put in place a valid commutation, and what the ATO deemed as valid is set out in that practical compliance guideline, it does influence things like the eligibility for a fund to actually claim CGT relief. So if you don't have a valid commutation, you're not meeting the object of the CGT relief, which was the fact that they reduced their balance in order to comply with the introduction of the transfer balance cap. So they needed to ensure that they advised their clients in a timely manner of the actions that needed to be taken initially before the 1st of July. And then we needed to make sure that there was this second step of paperwork completed as part of the fund's year-end accounts. So what we've done in our software here is ensure that there's this two-step process. So the first one here, and I'm going to use predominantly today the integrations just to show you. So our BGL Simple Fund here, again, we're just choosing the name of the fund and going through the particular process of allowing for the commutation and so forth. The one thing that I really want to focus on here is that this document allows for both documents to be prepared, and you can choose based upon one key decision or answer in the system to ensure you're producing either the first document or the second document. So you can see here it's dragging all of the data out, importing that data into the document, enabling us to go through review that information, ensure that it's correct, and then answer the specific decisions that come up. So it's including all of our trustee member info and so forth, and then going through. So this next page here is the important one that's enabling you to understand the decisions and tap in to our expertise. Notice here that I hadn't put in a meeting date, so we'll click on that particular date here. So it will capture out some information where there are mandatory fields. So what we're looking to do in this situation is the second step. So what's the pension? We needed to work out which pension was being commuted, the rule that allows for it, the date of the commutation, and then you can see the next one. Did the member complete an initial request to commute the pension in accordance with the practical compliance guidance? If you select no, it will produce that initial document to ensure that it should have been done, in essence, before the 1st of July. If it is the second document as part of the accounts, we should now know what that physical amount is, because we needed to ensure, as part of the PCG 2017-5, document what the amount is by no later than the lodgement of the SMSF tax return to ensure that it is a valid commutation. So you need to make sure that you're doing this second step, not just triggering that initial action that was done. So you can see here what we're doing. We simply review that information, place that order, and then it will generate the specific documents for you. So we have in here the secondary document in this two-step process that says we initially had our PCG that complied here for the commutation. As part of the completion of the accounts, we're now confirming the confirmation here of the calculated value being $328,562. So we have in our initial process the member request and trustee acceptance, the conditions by the ATO. Here we've got our trustee resolution around that confirmation, and then the notification to the member that that adjustment has been made as part of the completion of the financials, because that needs to have occurred inside the financials at the 30 June 2017 accounts. So let's keep moving on. We then said to Sam, okay, now that you've gone through this process of ensuring that all your clients are complying with the transfer balance cap or those truce reforms, what clients are eligible or look likely to benefit from applying CGT relief? So this was a significant issue in the advice process here for a range of clients that needed to comply, either, again, with the introduction of the transfer balance cap or those receiving TRISs, because, as many of you will understand, there is a huge CGT uplift that can be applied here as part of that cost-based reset. So what was initially required, and many of you have been coming back and understanding on a regular basis, what are the requirements and when do I need to do certain things? We need to ensure that we satisfy the object of the relief and that the ATO might not look to apply Part 4A in certain circumstances where we're trying to contrive situations where they may not have ordinarily qualified. We may not have put in place the documentation that would have allowed for that valid commutation to occur. We needed to understand the conditions of the segregated and proportionate methods when the different methods apply and what impact that actually has. We spoke in our masterclass around decisions for income tax purposes, where we're switching from the segregated to the proportionate method and what documentation we need to be putting in place based upon whether we need an actuarial certificate or not, and how we document those decisions and make sure that the record keeping is done and done properly. So one of the things that I regularly get asked is, well, like, doesn't this SMSF software just do it all for me? And this is probably the most common question I get around all these type of documents that we produce. The most common response that I provide comes around the fact that the SMSF software is really a function of what your outputs are. So when we did our masterclass recently, I posed the question there. So does the SMSF need an actuarial certificate if it switches from the segregated method to the proportionate method at 30 June 2017? Now, whatever you do throughout the software, whichever one you use, is simply a function of whatever your understanding is. And you can see here the clear and distinct differences as to whether we needed to get a certificate or not. Now, the ATO have made their views around whether, if you switch to the proportionate method, we would need to ordinarily get a tax certificate. But the question then is when have we actually attributed the income for that year, and when have we made the decision to switch to the proportionate method. And that is ultimately going to determine whether we want to get a certificate or not, not whether we have to, but whether we actually need to. So you need to ask yourself, is the software providing you with the level of knowledge required to overcome this uncertainty or confusion in whether you are doing things right or not? And that, to me, is the most critical point here, because what we have built in particular, when we look at this example in the segregated method, we've combined some of these questions and the training when we put those two together to give you the confidence in doing it correctly, and then using the software to provide the efficiency to deliver this. And what we've done in this form is we've actually got two different documents that get created. One is we've made this decision to switch to the proportionate method as a result of the compliance with the transfer balance cap. So we can see here all this information comes into the system. We can leave these dates and decisions and times blank if we want to, or we can fill that in. But then what is the reason that we're applying for the relief? Is it a TRIS? Is it a transfer balance cap issue? And it's starting to ask us a whole range of questions. Have the assets stopped being segregated current pension assets during this time? Yes, we've switched to the proportionate method. Well, what was the reason that we did so? Was it to comply? Was it inadvertently with a contribution or something? Well, when was the date that we actually switched to do this? And we've had a recent request where we've got people using BGL Simple Fund or BGL Desktop, for example, and the names of the reports are different. So it will just ensure that you've got the right naming protocol, because we're saying to you should be attaching that schedule or report off the back of it. But what this outcome is with this document is it enables us, and I'll just pull up the CGT relief document here, is that it's enabling us to not only do this initial switch from the proportionate method, from the segregated method, I should say, to the proportionate method, but it's also advising us that we are satisfied that we would only need a certificate where we would have income that we'd need to account for that was either accrued or received on the 30th of June that may have resulted prior to switching methods. But in this instance, we're saying, and by virtue of the documentation, this is the last event that's happening on that day. So we make it very clear throughout this documentation that as it's the last event and we've already accounted for all income and received, we are of the view that whilst the fund has switched to the proportionate method and may ordinarily need to get a certificate, we are satisfied that the cost benefit in doing so does not require the fund to obtain a certificate under that circumstance. So we then have our resolutions, and then finally, we then have our CGT relief document, which we put in play in accordance with the actual lodgement of the return. So we qualify for the relief, under which way, the approved form, the specifics of the CGT event, what our record keeping requirements are, and then our resolution. So putting in place those two documents, in particular around the segregated method, are really important. And we have equally documentation around the proportionate method and thinking about decisions as to whether we're deferring or we are including it in the current year, for example, as well. So you can see in here, it's just making those particular decisions, the choice for capital gains tax, what that amount is, and then again, whether we're including it or not including it in that year, the tax exemption that may be relevant for that year around the deferral for that notional deferred gain, etc., etc. So let's move on again. And we then focused on, well, there's now that we've got this greater consistency in what we're doing, there is a smarter way to start to build these income streams and not relying purely on the SMSF software to do so. So what is important here is to ensure that we are creating pension or income stream documents that complies with the fund's trust deed. And again, this goes back to building uniformity in the approach that ensures that we're complying with the governing rules of the fund. In addition to what SIS imposes on us, we may have certain options or things available to us that we can do in addition to what the specifics of the SMSF software will do. So for example, if we built and relied upon the minutes that may come out of the software, some deeds actually require an agreement or a pension contract to be done. So if you're relying on the minutes out of the software The question is do you have a pension in existence or not, because you haven't complied with the rules of the fund. Here, what we're focused on is not so much whether it's an agreement or minutes or whatever, but the fact that there may be the ability to, in particular, add it as a special rule of the fund, which therefore means the terms and conditions that were imposed in that document can be altered at some point in the future without affecting the income stream itself. So the ability to add or remove a reversionary beneficiary, we are of the view that you can alter the terms and conditions of the TRIS to become an account-based pension without having to commute and repurchase. We're still waiting on further views from the ATO on that particular matter as well. And we've seen the Tax Institute, for example, take the ATO to task and not agree with their specific interpretation. Simple things like providing a PDS that explains to your client how the pension will operate post 1 July 2017, all part and parcel of the software that we provide. And what we are looking at the moment, doing a little bit of work with licensing for accountants, is some additional letters that really deal with whether you're licensed or non-licensed, what you can and can't be saying, how you should be getting clients to sign these things off as well will be critical to ensuring that you're de-risking your business and staying out of the eyes of ASIC as well, subject to what you are and aren't allowed to do. So let's just go through here. And again, I want to just navigate a little bit around the building of complying pension documents. So we've got in here a whole suite of documents, and for some reason it's not opening up on the full screen. So we'll just go through and show you this way. But you can see here we have a complete area of documents around pensions, more comprehensive than anyone in the marketplace, from commencing to rollbacks. We previously had obviously our commutations, our conversions to TRISs. We've now got our TRIS in retirement phase, our CGT relief ones. We had our old Regulation 995 elections where you were treating those as lump sums under the old rules as well. So very comprehensive suite of documents to build pensions, and again, using the efficiency of the integrations that we have, and this time we're using the class import here to build the documents. So we can pull out of the systems the fund information, the member information, the trustee information, and the specifics of that member. So you set up that information of the pension inside your class or BGL, and it will drag that data out, but then ask the additional questions that you need in order to generate documents that are consistent and comply with the specifics of the fund's deed. So let's just again go back in and look at the pension documents in this example. So if we share this screen, we can see our member request here. We've got new concepts of it being a retirement phase superannuation income stream. It gives you the ability to deal with segregation, reversionaries or not. The fact that we want it to be a paramount document, so that you want the reversionary to take precedent over any death benefit nomination that may be in place. We have our resolutions around the way in which the request has been received, the fact that it is a paramount document, the powers to pay the pension, whether we're specifically segregating or not, reversionaries, like I said. We've got our components, the requirements of paying the income stream, our transfer balance cap reporting, and all the resolutions that enable us to be able to pay that pension going forward. And then ultimately, our member notification to the member around the operation of that income stream. And then finally, you can see here the product disclosure statement that goes through not only the conditions of the pension, but the impacts under the superannuation reforms as well. And we also have in here things like our TRIS to retirement phase documents. So new documents from the 1st of July 2017, if the individual satisfies that condition of release, and they apply and put in place written notice, so they request the trustee to move the TRIS to the retirement phase. And then we have, of course, our minutes around the requirements for transfer balance cap purposes, valuing that TRIS at that point in time, and then the resolutions around that decision, and then ultimately the notification back to say that all the requirements of that TRIS that were previously being paid have now moved into the retirement phase. So, like I said, we have a whole range of documents within our document suite that focus on pensions and put a real heavy, and that would be the case, boot me out, that's why I do videos, but that really focus on the benefits of pension phase, and that we have, many of us will now have over 50% of our clients drawing income streams. So really understanding what you need to put in place and why is critically important. So again, doesn't my software do this for me? Well, sure, but are they complying with the funds governing rules? And that's what I, as a minimum, ask you to go back and check. What does the deed say around how the pension can actually operate? And the one thing that I think is going to come up at some point in the future is that we will end up in a similar situation, in my own view, that will be as was the case with DBNs. So death benefit nominations, we used to be able to produce those templates out of our SMSF software, but quite clearly, as case law has been presented and some of those outcomes made very clear, there's no such thing as a template for a DBN. You must follow the governing rules of the fund. So if the governing rules say you need to jump over a fence and do a backward somersault before it needs to be accepted by the trustees, well, that is the requirement that needs to happen, whether it's non-lapsing, lapsing, so on and so forth. And we've, like I said, we've seen a whole range of cases there. So this is where the risk will come in, and the ATO could take a greater level of attention to this, because there's a clear difference now between retirement phase, where we do get tax exemption, and we don't get retirement phase tax exemption, in particular around TRISs. So these obligations of a fund to ensure that they move to the retirement phase, I think will mean at some point we might see a shift back from these software providers in producing those, but greater levels of integration for us to be able to click through and be able to generate it based upon the deed or document that you currently use. And then what we did is went through and identified the client opportunities. And this is where we're seeing this really big shift now around the regular reporting that can be done through the processing inside Collins House. So cloud software here has now put a greater focus on the regular reporting for Collins House in how to address the impact of the super reforms. And we regularly have conversations with them as a member about, at what stage are they at. And as a gold member, we put in place this initial 90-minute strategy session to help flesh out these core issues and put a framework in for the next 3 years, 12 months, next 90 days, and get some real focus on how we're going to benefit off the back of growing the SMSF business. So this then allowed them and gave them greater visibility of the levels of client pensions that are being taken. And therefore, they can proactively be talking to their clients before the 30th of June, but also the way in which we actually deal with the benefits being paid by the members. Because first and foremost, we want to ensure our tax exemption. Then, subject to how the benefit or how the fund is constructed, we want to ensure that we're maximising the fund's tax exemption inside the fund. So we might be looking at taking benefits from the accumulation phase. And then finally, when we look at the estate planning considerations, which they're spending a lot of time going back and talking to their clients at the moment, we want to look at this partial commutation potentially because of the impact of the transfer balance cap. Not only those that are above the transfer balance cap, but husband and wife, for example, where the combination of those two benefits is greater than 1.6, we need to be far more strategic in terms of how we're dealing with those particular benefits. So in this case, and I've spoken previously about that prioritisation there, we've got a situation here where, again, we've now got our integrations to push this information out. We have our member information, fund information that is all captured, as you can see here. But in this process, we're asking the specific questions that will say, well, are we actually making a decision? I might just forward this along a bit. So we've got the details of the pension here around the income stream. We're calculating the member's age and so forth. And then what we're actually getting to is the payment details. So is the minimum, what is the minimum pension that's being taken? What is the, how are they going to be taking the amounts out of the fund for the year? So maybe say at least the minimum pension. If they're going to be taking at least the minimum pension, how are they going? Oops, sorry, I shouldn't have done that. My apologies. So let's move up again. So if they're taking at least the minimum, well, then what we need to do is we want to determine a prioritisation of how those benefits are going to be taken. Are we taking it as simply pension payments? Are we taking it as a lump sum from the members' accumulation interest? Or are we partially commuting this from the superannuation income stream? And in this process, you can see here, I'm just going to go a bit forward. So where we've got this minimum pension obligation, trying to get to it, sorry. Okay, my video's clearly having a hissy fit, but we can see here, once we decide to take the accumulation interest here, what that will enable us to do is put the prioritisation into the annual pension. So let's go and take a look at these generated annual pension minutes now that take us through the requirements of drawing more than the minimum pension. So we can see here we have what is our initial template. So where the trustees are calculating what that minimum pension obligation is for the current year. Then what happens is, as part of this decision, we're seeking further information from the member as to whether we're going to be taking more than the minimum for that particular year. In this case, what we're saying here is that the member has advised that they intend on taking more, and they have indicated this order of priority in how those benefits are to be taken. So here we're assuming that there's no accumulation benefit, but we're looking to strike an amount against the transfer balance cap to do a partial commutation. So again, subject to the accumulation account or not, and looking at that prioritisation would determine how we might be documenting this decision. And then finally, we have this, again, resolution or minute that in essence confirms that there's that prioritisation, and it is critically important when we refer back to the PCG 2017-5, which gave us that framework as to what the ATO deems to be a valid commutation. So here we have our powers to commute, we have our T-bar reporting, and then our trustee resolutions that will determine those actions that will be taken to A, ensure we've met our minimum, and then B, to look at those partial commutation requirements. So let's go back and revisit what we have then delivered to Collins House as a result of the membership. So some of the things that Sam has come back to us, and when we spoke about this, is what this has now enabled him to do is it's standardized processes for implementation, right from the initial point where the deed was in play, now to the way in which work is done inside the practice. So consistency of documentation is key here, because everyone in the practice knows the way in which things are done, and they all correlate back to the fund's trustee. Importantly, it's not only has the training given them the uplift that they needed in their practice around being confident to talk to their clients, the level of support on the technical issues as well means it gives them peace of mind that they know where to turn to for that training and ongoing support as well. So the benefits and outcomes that from what Sam has said to me as well is this is what has been achieved over what we've done in the last 12 to 15 months. So it's provided them with clearly a better way forward using the technology that saves them the time. So it saves us the time because they're using the integration. And this one of my favourite stories out of the practice was when we were up there doing one of the sessions. A lot of the staff were still manually inputting this stuff, and usually many of the staff online might laugh and have a chuckle that sometimes you're trying to push it up to your boss, so that the partner or director to look at ways in which you do things. But that Sam was very forthright in his response to say the integrations are there for a reason. The time will be saved, so there is no if, buts or maybes. The integration, if it's available, that's the way you do the work. And that is the way, because it's saving an enormous amount of time, like I've showed you in some of these videos today. Most importantly, it's provided him with a greater level of confidence engaging with their clients around the superannuation reforms. They can have the discussions being very clear in their mind what the issues are and what specifically they need to take around the actions, whether it's transfer balance cap, TRISs, CGT relief, and much more. Importantly, they've been able to leverage the specialisation that the SMSF Academy provides that de-risks their business. And importantly, they can categorically say that it's improved their revenue through the greater focus on their SMSF business model. And I would argue now they are far closer, I would say that they are actually running a specialist business model in that 12 to 15 months we've been working with them from where they were initially, where they were running that more generic or generalist approach to doing the work. There's a little bit of work. We're still working through this as a process within the business, but certainly there are some real benefits that have been achieved So again, thank you to Sam. He's not online today, but he did say he's going to watch it. He's off at a conference. That, you know, it's been a fantastic journey, and this is the type of stuff that we actually like doing. So as a gold member, Collins House has access to nearly 50 SMSF legal, tax and compliance documents. They access regular ongoing training. So I say they do access regular ongoing training. They see it as critical to keeping up to date with the latest technical issues and the strategic client opportunities. They clearly leverage the software integrations. It doesn't matter whether you're a class user, BGL, Simple Fund 360 user. The integrations for two-way sharing of information. We now have introduced our first push to class integration, where once you do a fund establishment, you can click a button and it sends all the information straight in, and you now have your fund set up in class. We'll be able to do that sort of stuff with BGL in the not too distant future as the API develops. We'll be sharing this information both ways, right across adding members, removing members, deeds of variation, death benefit nominations, investment strategy changes, and a whole lot more as a smarter way of actually doing things. So you can leverage some of the benefits in whatever level, shape or form through either our tiered membership solution, or you can actually even purchase some of these documents on a pay-as-you-go basis as part of our free membership or PAYG membership. So these are some of the ways, or subject to the level of membership or whether you are a pay-as-you-go, this is what you get access to. So our gold gives you, in essence, free access right across the site, from our legal, pension compliance documents, access the integrations, access the ongoing technical and training, access our integrations with ASIC and the ABR around your company orders and fund establishments. Our peel back to our silver just really takes out the legal documents. Rather than paying a larger monthly fee, it drops that fee to exclude that, and then you can purchase those legal documents on a PAYG basis. And for users of Class and BGL, we actually have coupon codes that you can use that would reduce what that ordinary fee is. And then our pay-as-you-go, our bronze members, of course, get access to our training, but then you have the ability simply to buy each and any of these documents on a pay-as-you-go basis as well. So they're the key differences. If you want, there's a link there to our document suite that explains what we also have as well. So I guess why us? You know, we are a specialist SMSF platform. This is all we do. What others do is they go to breadth of documents. We focus on depth in this space. We offer a versatile offering with flexible options and pricing. And ultimately, the business was founded and operated by SMSF specialist practitioners in this space. So we know what those challenges are and how we deal with those challenges, both in a legal, advice, and administration, accounting, compliance context. So when is the right time? We're all busy. I understand that. And the question that I want to pose to you is, you know, there's arguably going to never be a right time, because we do have people that get trials. They go, yep, this is all great. And we get a week through it. And they're like, you know, kind of got busy. So I challenge you, are you focusing on these things now that will provide you with the free time in the future, or are you going to keep being busy? And that is something that what I'm offering to you is I'm going to provide a 15-minute appointment for those that are prepared to want to make some change and do something about it. So you're adaptive to change and see technology as the enabler. You're an action taker that want to implement this now and create that free time in the future for you and your business. Because if you are, then I'm happy to have this 15-minute appointment. We'll flesh out some of these, 2 or 3 issues, and the number one thing you should be focusing on as part of the reforms. So I'm making this free as part of my time and an investment for people that want to contemplate our platform further. So it's not a function of people that are simply wanting to ask me a question. There are other ways in which you can do that, or you simply think it's a great idea but then ultimately get too busy with it as well. So if you want to take advantage of this, you can do so. I'll actually add this link into the chat area as well in a second, and you can then book that time with me. It'll come up with my diary, and I'll be more than happy to have a further discussion about that with you as well. So that's really it in respect to today. Like I said, it was about sharing a story, one of our great success stories, and how we've been able to influence not only in terms of just providing with documents, but really making a difference inside of practice into how that business model needs to look into the future. And really, we're at a point where we do have clients, or we do have businesses that are moving through and being impacted not only by the technology change but by the regulations, and this provides the perfect opportunity for you to take those necessary steps, and that is in essence what we focus on doing, and part of our purpose is to inspire best practice amongst professionals that ultimately enable better retirement outcomes for your clients as well. So that's it from me. Thank you for joining me today. I hope you got some really good value out of what we've been building and put together. And if you do have any questions, again, like I said, I invite you either to make that appointment with me, which we can have a further conversation about the benefits of membership, what we've got. Other than that, I wish you all the best. If I don't get to speak to you again before Christmas, we still do have some training, in particular around our masterclass. Have a great and wonderful Christmas, and I look forward to an even bigger and better and some very exciting news that we'll be releasing in January of 2018. Thank you, and bye for now.